to say thank you so much, everyone, for joining. All the speakers, Francis, Dylan, Marketing Mayhem, Wolf. We're going to go ahead and kick off the event. Today we'll be discussing earnings results for APPS, or Digital Turbine. Like I told Dylan, didn't really have a chance to dive in and go over in depth everything. So maybe you guys can just someone kick off and maybe, I don't know, whoever listened to the call, or maybe anything that stood out for you, just to take turns or whatever. Go ahead, Wolf.
Yeah, Max, just want to say apologize for being late. I was just coming from a meeting, very excited for this. And if you want throughout it, Max, I can share you. Francis helped put together like a nice little structure for how this should go, which I think would be really good. I'll go ahead and share that with you now. But if we want to kind of start with like high level overview of the report, then we'll go into commentary on top line, the bottom line, and there's like a nice little outline that'll run by you. But we could start out with like that high level overview of the report, maybe with Francis taking it off the top.
Okay, there we go. Yeah, thought it was a decent result. I mean, I wasn't too surprised. I think last week, and I don't know if this was kind of a snapshot or something. I don't think they mistakenly released the report. I think officially with the SEC, they were meant to file the report last week. So anyways, I think we got a good hint of the results last week already prior to today. And yeah, I mean, in general, it was a good, decent result. I mean, the company's organic growth was about 95% year over year. And then overall, it was over 142%. So it was good. Yeah, I mean, I kind of expected a little bit more. My expectation was, okay, maybe they would, because we knew this, they gave this as the guidance in the previous quarter that it was going to be about 140% year over year. So that was the expectation. So I was kind of thinking, okay, maybe we might get around 150% year over year. But I mean, it was good. I mean, there's no complaint at all. They were profitable. They're generating free cash flow. The net income is improving. So yeah, I mean, it's good. And I think the after hours kind of reflects that modest expectation. You know, it's not going too up. It's not going down as much. So yeah, that's it for me.
Dylan would like to chime in and add?
Yeah, man, I'd love to. So apps is one of my top 3 to 5 positions are fairly equally weighted, and they fluctuate. But apps is definitely going to be in that top 5. I think it's it's third right now behind SoFi. I really, really liked what I saw. And the reason, can you guys hear me? I think I'm going in and out of.
Yeah.
All right.
I could hear you. Now I hear the car.
Did we lose Dylan?
I think he might be reconnecting.
Yeah, the last thing that I heard is the car. He's a listener right now.
Okay, he's reconnecting. Should we just go to markets and come back to Dylan?
Yeah, sounds good to me. Marcus, can you
hear
us?
Yeah, I'm here. I thought the earnings were, pretty much in line with the kind of expectations they had set us up for. They beat a little bit on EPS, by about 5 cents. So that was good to see. It's always good to see a tech company that actually seems to be making money, since the mythos is, of course, none of these companies ever make any money, and therefore they're never worth investing in. And we know the truth. That's not even close to reality. They're taking their profits and reinvesting them. But Digital Turbine's, even with their acquisitions, able to produce a bottom line beat. And I think that's pretty impressive to look at that for what it is. As Dylan was saying, I'm in a similar position where Digital Turbine is one of my top 5 positions. I think it's probably my number 3 or number 4. I think this is a really exciting space. I mean, we have a huge total addressable market in mobile. We have a huge amount of companies that need to get their apps on these mobile phones, these kind of like out-of-the-box preloaded apps, and they pay a premium to get in front of people's eyes. Like, if you're Lyft and you want to compete with Uber and you're the underdog, you got to have your app preloaded onto a phone. So I like what we're seeing. I'm confident about the company's vision moving forward. I think the biggest risks that we face are really from the mobile companies themselves stepping in and saying, "Hey, we're going to try to do something similar," but it'd be easier for a Google or another company like that to buy Digital Turbine than to try to reinvent everything they've done, considering that they're trading at a pretty cheap valuation for a mega cap to come in rather than reproduce all their work. So overall, I feel pretty good about where they are. Guidance seems like it's in line with what analysts would expect. So the after hours reaction's kind of muted. And I think, Francis, you alluded to last week, they kind of told us, kind of set the expectation for where we would probably be. And so they met that expectation, and we had some gains coming into this. And that's probably why we're not seeing too much after hours. So overall, muted, but longer term, nothing has changed in my thesis on this investment. I'm still very constructive on it moving forward.
Nice. Thanks so much for sharing your thoughts. I see Dylan is back right now. Dylan,
Yes.
can you hear us?
Can you hear me?
Yes, I can hear you.
Oh, this is awesome. Okay. Fantastic. So I loved what I saw. I can't help but agree with him. So with Digital Turbine, so I think that they ended up posting, I think it was like 143% year over year after you account for, I want to say it's, oh my gosh, it's totally escaping me, but it was one of their first of their 3 acquisitions. If one of you guys can remember that and chime in, that would be helpful. But I know that that's what that is including, and then their Q1 guidance that was increased and bumped up for their fiscal year 2022 Q1 guidance. It's important to note, just for clarification purposes, their fiscal year ends in what would normally be like fiscal year, so like it basically ends in July, right? So that's important to note there. Actually, no. My gosh, I'm all over the place. Anyway, I'll talk about just the results. So their earnings increase that they had for fiscal year Q1, that includes all 3 of their recent acquisitions that they had. I thought that was a very nice bump. Analysts were originally expecting about $100 million in revenue for Q1 of fiscal year 2022. And then they bumped it up to about 188 to 192 million. So that was fairly significant. And I also noticed that they're guiding. They didn't actually provide official guidance, but they're guiding for $1 billion in revenue for fiscal year 2022. This is pretty amazing because this is a $6 billion market cap company, and they're guiding for essentially $1 billion in revenue. This is going to be the inclusion of their native organic business, which grew, I think Francis ended up saying 95% year over year. Then they had fiber. I think that one grew 130-something%. And then the other 2 ended up having their own pretty substantial revenue growth, nothing less than 40%. So all in all, what you're seeing here, in my opinion, from this, my key takeaway from their top line results is that you're seeing a juggernaut in the making. And they didn't acquire something to make sure that their business is continuing to grow. They acquired to continue to expand their offering. So I thought that was my key takeaway there. I really loved what I saw. I love to see, I listened to the earnings call. They mentioned that they will continue to have an operating profit somewhere in the mid-teens, which is very bullish. Like the operating profit in general, you obviously want to have a larger number, because it's one thing to grow a company 100-something% year over year. It's another to do it while being profitable. So it's like I'm looking at a $30 billion company. And to also put this into perspective too, when you think about the trade desk is currently going to do about $1.1 to $1.2 billion for this year in revenue. And their income is going to be substantially higher. But they're a $26 billion market cap company. And Digital Turbine is going to match that. They're probably going to be somewhere along the lines of similar revenue as Digital Turbine, and they are only a $6 billion company. And like I said, their net income is a little bit higher than Digital Turbine. So one could expect that the trade desk would be trading at a higher premium. But it doesn't justify a $6 billion market cap. With this, I hope an institutional investor, that they end up seeing this and they see the opportunity here and they actually start buying the stock. But it seems like anything that we do these days, it's like growth is out. It's just not the cool thing to do right now. But that was one of my key takeaways there. I do think that the reason why the stock is only moving 2% after hours, and it really seemed like this when I was listening to the call, is that people seemed confused as to exactly how to value the business moving forward, because they did provide very, like, I don't want to, it's not questionable. It's just very vague guidance in terms of their profit that they could expect moving forward. Where they're like, I think for this year, it'll be mid-teens as we, move everything over and we consolidate and we make sure that we do our change management effectively between the three companies. They're so focused on making sure that their mergers are all going successfully. So I think that's a big reason why the stock isn't moving that much. But after these earnings and after seeing a lot of their previous investor conference calls that they did with Needham, I think, and then hearing this one, the only thing that I keep thinking about is how undervalued Digital Turbine is. It should be, it really should honestly be $10 to $12 billion stock, without question. It just doesn't make any sense to me. But that was my key takeaways here.
So what's your price target? $100?
Dude, at minimum. It like $100, I really do see a couple different stocks out there right now, just from a valuation perspective. I see Digital Turbine with an immediate $40 upside. It should be $100. I mean, they're going to do $100 billion in revenue and they're a $6 billion market cap and they're profitable. Like, that just doesn't make any sense to me. I mean, there's sure you can discount like forward cash sales, you can do their assets and liabilities and all those other discounted cash flow models that a lot of Wall Street analysts use. But at the end of the day, the company is growing 100+% year over year. They have let's just say 15% operating profit margin. And they have a long runway for growth in a major secular growth market. So I say at least $100, if not $120 in the next couple months. That's what only makes sense to me, at least within the next year.
Isn't it? It's their all-time high, yeah, around $100 or no?
Yeah, or close.
That's
I
correct.
guess Dylan disappeared again. I don't know.
The all-time high was 102.56, and that was kind of when we were in the peak buy everything euphoria. And I think that was maybe hit in like probably early March, late February, when Digital Turbine had that kind of pricing. And since then, it's kind of fallen out of favor. I mean, this is not one of the more popular meme stocks or growth stocks. People don't really talk about Digital Turbine much. It's not on the top of a lot of people's lists. And in a way, I think, from a contrarian standpoint, that's actually good. It speaks to the runway ahead for this company as more institutions become interested in it and as more investors recognize the value that can be unlocked here. And I just don't think it's an easy to understand company. I mean, when you look at the business model, it's far removed from what most people deal with in their day-to-day lives. Like, if you're a Peter Lynch investor, you're probably not buying Digital Turbine because you can't really relate to what they do, unless you're in the mobile space and you're providing phones to get distributed out there. It's not a business that a lot of people have direct relationship with. So it's a lesser understood company, but I think that's part of what makes it kind of attractive here. As Dylan was saying, the financials, the fundamentals on this thing are extremely exciting. And the way that it's growing suggests that a much higher price is warranted. I mean, $120 by the end of 2021 is probably a very conservative target. So overall, I think, the earnings are good. The guidance is solid, but we're also talking about a company that you look at their track record, look at how fast they've grown just over the last year, and look at the market space they're in and how fast it's that actual space is growing, and how Digital Turbine is taking a leadership role in that market. So you've got a fast growing company in a fast growing market, assuming a leadership role. That's kind of the secret sauce you want for exponential hyper growth.
If you guys want, yeah, I totally agree with MM there. Yeah, I think you absolutely nailed it. And just going back to kind of what Dylan even mentioned as well, just thinking about the fact that they're in a $1 billion run rate as opposed to like a trade desk that trades that's they're pro. I think they're about trailing 12-month revenues are about 900 and something $1 million, and they trade for about $36 billion, right? And so you just definitely know Digital Turbine definitely they're absolutely going to reconnect, right? They're absolutely going to, I think there's going to be kind of I mean, the valuation as opposed to the revenues would eventually catch up to each other, very soon. I think one of the biggest challenges they've had is just the fact that they've done a lot of acquisitions, and sometimes investors have a hard time trying to differentiate between how much of the company's growth is actually organic, right? Digital Turbine is currently installed, or they're behind over 600 million devices worldwide, right? Like, so think about that. Like, almost, so it means a high majority of devices, Android devices specifically, right? Because they're not really on the iOS devices. On Android devices, there are over 600 million. I mean, that's like, I don't know, maybe a tenth or so of the globe, right? So think about that wide reach and how many devices are actually using Digital Turbine. However, lots of people don't realize that some of the functionalities that we actually get on our phones, especially if I use a Samsung, right? I use Android. Some of the ads that you get on your phone, there's the feature they have, which is called SingleTap. So SingleTap is actually that's the secret behind Digital Turbine. Actually, that's one of the reasons why they've been growing as much. And what Single Tap is, it's just it's the best way to describe it is it's one click download. So it's a feature on your phone whereby I'm trying to think of the best way to describe this. Well, if you were playing a video game on your phone, for example, you could easily just get an ad pop up, all right, maybe on the left, right corner of your phone or something. And once that app, whatever that ad actually does, pop up like a 5 seconds pop up or a 10 seconds pop up, if you wanted to actually download that app, you could click, just clicking on it alone enables you to automatically download the app, right? And so rather than you having to go into your Play Store to actually download it, you could just do it in a single tap. And so ever since Digital Turbine launched that product, it's been huge. And actually on the earnings call today, you actually heard it. I think now they make close to this. They mentioned about a seven-figure dollar on a weekly basis. It's one of the biggest drivers for the company. So yeah, but just going back to what MM said, yeah, it's not really understood, but that's the secret. And honestly, I am thinking about adding if the stock drops tomorrow, I might look to add it because I think eventually you're gonna get a re-rating on this stock.
So I'd love to speak a little bit about the business model here too. If it drops tomorrow too, Francis, and I'll back up the money truck and I'll buy some more. My dollar cost averaging is right around 60 at the moment. And I remember when I saw it at 12 to $13. I remember I looked at it and I was just like, oh, it only installs on Android devices. And as a typical American, I just closed minded and it's like all of us only use iPhones. But then I had to reevaluate this because the stock ran from 12 to 13 from when I originally read it all the way up to 100. And I'm like, okay, there's something here. And there's big, massive pullback and growth. And then that's when I started to realize that 90% of the world, and they're a global company, so they're international. So 90% of the world actually uses Android devices, which was really interesting to me because that changes the dialect here. So when you think about Digital Turbine, what they're doing at the moment, or not at the moment, what they're doing in the past is they essentially, like how you said, Francis, they had ads pop up on Android devices where people could instantly download an app, right? That's what they were originally doing. And then they basically had their software. So Digital Turbine is a software company installed on all these different Android devices. So Bill Stone ended up saying, okay, this is what we're doing right now. This is what we do really well. And this is not a new company either. You can look at their chart. They've been around for quite a while. So then they became really good at that. And they said, okay, we're going to become an advertising company. And then that's essentially why they ended up acquiring all these latest companies here too. So you got like Fiverr, you got like Ad Colony, and essentially what they're doing here is now are they not only installing these apps on somebody's phone, now their dialect towards their customers have changed as well. So not only are they able to install the app on their phone, but they're also able to provide advertisements on that app to monetize that app. So now they have their one-time revenue that they've been successfully doing over time, but now they also have recurring revenue through ad tech. So that's essentially why I've become so bullish on this company, because number one, they may only do Android devices at the moment, but they are partnered with Google. And Google, they've made Google billions of dollars. So it's hard for Google to say, yeah, let's just do it ourselves, because Google makes money off of Digital Turbine. Both Digital Turbine and Google split the cost, split the money, and that's how that partnership works for them. So they're partnered with the Google Play Store. So you take a look at how big the market opportunity is 90% of the world using Android devices. And then you think to yourself, well, now they have a really competitive advantage over the other ad tech companies, because now they actually have a partnership with a lot of these other apps. So they're able to download the app onto the phone. And then from there, they're also able to advertise on their app on that phone. And that's basically what they've done, is they've created like this market leading position to become like a mobile application advertiser of choice. And I love, this is going to be a massive secular tailwind for years and years and years to come. With the market that's growing at like 20, I want to say it's about 20% CAGR over time.
I just wanted to, I think that those are all really good points, Dylan. I want to chime in and just kind of add into what you're saying to make the case even stronger, because the other thing that we're seeing that feeds into this hyper growth story is mobile phones are the new TV. And what I mean by that is Americans spend about 3.5 hours a day watching TV. Mobile phones are going to eclipse that in the next couple of years. They're already at 3 hours and 10 minutes to 3 hours and 15 minutes or so, depending on what surveys you look at. So that's a lot of face time that people are spending. And so to double down on Dylan's point, they're no longer just helping people do a single click app install. They're doing full video ads. They're doing embedded ads inside applications. They're helping publishers directly monetize. So they've got a marketplace set up now where you can basically bid on putting those ads in. So they've completely transcended from being just sort of a one-stop, kind of like you can just do a single-click app install and pay a premium for that, which is not really a recurring revenue stream. The same way that what they're doing now is they're vertically integrating to become like the premier Android marketing platform. And I think that it does also kind of position them in a way where, at some point Google would be wise to buy them. And it wouldn't be that surprising if they did at a significant premium to what price they're at right now.
Yeah, I absolutely agree. I mean, maybe they might get acquired, but I ended up making a YouTube video making the case that they should be a $30 billion company. And it's also important to note, too, that they did end up saying both on their Needham conference and their investor call that they just had this afternoon, that they are not only going to just stay in the mobile space, that they're able to install their software on various different platforms, such as iPads or tablets, whatever you want to call them. So you can install them on tablets. You can install them on on connected TVs, so like Roku TVs, or even just Samsung, Panasonic, whatever you want to think of. So they're also not just staying here in just the mobile device, but they also will be installing the Digital Turbine software on these other devices where it's going to be running a similar model because everything is moving application based. So there's value for them to be had there too. So it's not going to just be mobile, even though that's going to be like, M's right. That's one of the best opportunities. But you also have, that they want to go into these other devices, which is just broadening their market. Like you got a $6 billion company here that is going to do $1 billion in revenue this year. And then they have a massive runway for growth. They just acquired the three most, like, I think that they kept on saying, like, I can't remember exactly what it's called, but they essentially are saying like their companies are really, they are basically working together extraordinarily well. So they're very synonymous. Like they all have a common goal and a common mission in place. So they've made these recent acquisitions that are just increasing the case for Digital Turbine for years and years and years to come. Like it's a $6 billion company. There's nothing that tells me that we're not watching a $30 billion company in the making, which is a 5x opportunity from here. Like there's just, I can't, I mean, the biggest risk that I see, because we always got to talk about the risks, is change management. Much like what Teladoc is going through with Livongo. This is a big case that you see when you hear about Teladoc. It's like, oh, you got Livongo executives leaving. Digital Turbine, they did mention this on the call, and they said, hey, when you got these acquisitions, the biggest risk that we see is not integrating within the culture appropriately, or and that's essentially where their priorities are, because they just made these acquisitions for a future investment, for the long-term growth of the company. And if they're successful, I mean, $30 billion company, heck, 50 billion, 100 billion, like that's essentially what we're looking at here, in my opinion. They match perfectly with, How to Make Money in Stocks by William O'Neill, the CAN-SLIM methodology. Their revenue is growing exponentially. Their earnings are growing exponentially. Their chart looks great. Like it's top to bottom. It's literally one of the best stocks I see out there, with the exception of like Upstart.
So you make a really good point about the other devices, and that expands where their total addressable market's going, Dylan. And I like to kind of take a moment to talk about that. So there's probably about 2 billion Android phones out there in use right now. And that's, as speakers have said, that's like 90% of the global smartphone market. But there's probably another billion plus other Android devices out there, because Android's making its way, it's already been on tablets, it's been on smart TVs, but it's making its way to a bunch of other devices, including even cars. So we're going to see the amount of time, the amount of face time that people have where they're looking at an Android device on a daily basis improving over time, while at the same time, Digital Turbine is going to be on more of those devices and accounting for more of the ads shown to people. So, you kind of have that triple whammy effect that adds the exponential growth story here. So I just want to chime in with that, because that was a great point about how there are more devices out there, and that really does broaden the market, and how much Digital Turbine can grow from here, just from that standpoint alone, not to mention what they're doing with marketing, and not to mention what they're doing with their acquisitions, expanding how they can get in front of people.
Max, did you want to say something, Max? Okay, maybe I could go ahead.
Yeah, go for it.
Okay, I thought Max wanted to say something. But yeah, I was even like, maybe we should even, I guess I could just maybe give you guys a couple of highlights about the acquisitions that were actually made. So they made three quick, it was almost like sporadic acquisitions they made like over the last 4 months here of the year. And actually after their last earnings report, this was in Q3, this was back in February. I remember saying on Twitter, because on that call they actually mentioned the fact that they were getting all of their credit lines like drawn up, and they had like this huge cash pile at the end of that last quarter. And I mentioned on Twitter in a thread back then that, hey guys, I think this company is going to be going on a sporadic acquisition spree back then. And ultimately, it just happened that right after February. So I think between February, March, April, and May, really, they made these three acquisitions all right away. So in a way, it wasn't so surprising. And so I think what you also have, together with all the points that Dylan and MM have actually mentioned it now is Digital Turbine now they're becoming more of a full stack ad tech platform. Like, so think about them as like totally vertically integrated across the whole ecosystem. So now let's go with the Appreciate acquisition. So what does Appreciate bring? So we talked earlier on about the importance of SingleTap and how that's the secret sauce behind Digital Turbine. So what Appreciate actually does brings to the business, this was the smallest acquisition, is it's a programmatic DSP system, so demand supply. So it's kind of related to what Trade Desk does. But this company is an Israeli DSP programmatic ad tech business. So they do a lot of auctions, DSP. So what a DSP for people who don't know is just kind of an auction for buyers and sellers of ads, right? So a seller who wants to sell an ad could come on this platform and say, "Hey, I have a product that I want to sell," and then obviously that company actually finds ways to distribute that ad over to crosses of consumer like me and you. So think about it as a demand supply system. But anyways, what Appreciate brings is actually a programmatic DSP system that could actually be synergetic to what they have with SingleTap. So that's the Appreciate acquisition. That was the smallest acquisition. Ad Cologne. Let's go with Fiverr. So Fiverr was the second acquisition they actually made. So what Fiverr does, it's a monetization app. So I think that's the goal. Is what you have now is, and Dylan mentioned this earlier on with Digital Turbine, is the fact that um the the origin was actually all about installing applications. Now they've pivoted with mobile policy and some of this to providing more content and selling ads on platforms. And so the next goal now is how do you best monetize all of these ads that you have, right? And so Fiverr is this company that all they do is they're very specialized in helping you monetize for maybe app developers. So if I was a developer myself and I wanted to develop an app and try to sell it, I would use a Fiverr related application. So, anyways, what Fiverr does is it helps with monetization, and I think going forward we're going to get a lot more understanding of how Fiverr would help them to monetize all of the application media and ads that within the business. And then Ad Colony. So Ad Colony is really the exciting piece of the acquisition. Is um, Ad Colony today actually is actually used by over. It's the largest mobile advertising platform in the world. Actually, funny enough, with 1.5 billion monthly users. Like think about that, you know. And so with Ad Colony, what you get with that is they have like in-game ads. So whenever you're playing games on your phone, all of those ads that come up, they do a lot of that. They have a marketplace, so kind of a marketplace for um, marketplaces, in-app kind of marketplaces. They do provide some of those pieces as well. And so with Ad Colony, what you're getting with them is they're helping them advance their mobile ad strategy and content platform. So apps that have news platform, if you have like an NBA or if you have like a BBC or whatever you have on your phone, if you had an app like that, those advertisements that come through those platforms, Ad Colony is one of the biggest platforms behind a lot of that. So, anyways, what you have then now is with this three acquisition is you had Ad Colony that helps them with the content and mobile ad, and it's widely used already. And I actually heard they have some iOS connections too. You have Fiverr, which is kind of think about Fiverr as like the foundational piece or the middleman that's helping with monetization of all the apps. And then you have Appreciate, who is helping them more on that DSP ad programmatic ad piece that they're using with single app. So, anyways, what you have now with these companies, with these three acquisition, and going back to Dylan's point, if they're successful, which I love that the fact that the CEO really talked about that on the call today. They're really emphasizing we need to successfully integrate this app because that's going to be key. If they're able to integrate all of these acquisitions, then you could see a giant in the making, right? You have and one of the secret sauces with this business too is, remember, I don't know if we talked about this, but one of the moats, you could say, or competitive advantage of Digital Turbine is their relationships with OEMs. So OEMs are like your Verizons, your Samsungs of the world, and those companies. And Digital Turbine's essential business, they're kind of the middleman between um, consumers who use phones as well as the OEM, the phone manufacturers. And so what you have is, with these acquisitions now that have run into the business, you have a situation whereby their bargaining power, their supplying power, kind of that their mode or their competitive advantage just got a lot more strengthened. So they have a lot more bargaining power with the likes of your Verizons, and all of those your phone operator kind of companies. And so if they successfully do this, I think we're looking at a really successful company that could be challenging Trade Desk. Who knows? In the coming years. But it is pretty exciting what this business is going up to. Oh, and then one last thing I'll probably just add is the international growth. That's been a huge piece. You heard about, they talked about it on the call, TikTok and Candy Crush. I think they said the CEO mentioned on the call there's a lot of momentum. I think that was growing about 50%, right? And international media growth was growing about 200% already. So yeah, we know about all of what they've got in the United States, but there is even a lot more international growth with some of these platforms international. So yeah, it is a pretty exciting business.
Awesome. Whew. Heavy stuff. Max, moving it back to you real quick, because I know you were trying to talk before, but I can't hear you. Can you guys hear Max?
No.
I can't hear Max.
Okay. I'll DM him. Max, because I think he was trying to talk before, but yeah, I can't hear him either. Okay. All right. So I think we covered kind of a lot of the initial. Sorry if I kind of got just lost listening. I think we hit a little bit on top line revenue growth, or do we want to kind of do, okay, Max says he's talking now. Uh, Nobody can hear
No.
him. Uh, I'll
Can't
DM
hear
with
him.
him for a second. Okay, okay. Do we want to do a little bit more on top line before we go to bottom? If we're actually 35 minutes in, with the goal of going to around 8. So I'll turn it kind of back to the speakers, to Dylan first. Maybe we'll just combine those kind of top line and bottom line, revenue growth, and then kind of margins, S&M, cash flow, and just kind of bundle those, and then we'll go into some more commentary. But to be honest, all the speakers have been doing a really good job, even with kind of your overview, just giving a nice picture, but just kind of keeping some semblance to it. To you, Dylan.
Yeah, I accidentally remuted myself. Sorry about that. Yeah, I'll just do top and bottom line. I think I started talking about it in the opening. 140. I think it's 142% year over year growth as far as it comes down to quarter four, and then I think it's 100 and see. Don't quote me on these numbers, but because I don't have it pulled up in front of me. I think it's like 130 something percent on a year over year basis. 95% organic growth. And then that does have to do with, I think, one of their acquisitions. I do think it's fiber that was included within the revenue on a full year basis, or even their quarter four basis. I think it was 14, 15, 16% operating margin, which means that this is a business model. They do have quite a bit of debt. You want to mention that it is underneath 3%. They said that on the earnings call. So for me, I think that if you're going to take out a revolving line of credit and buy such amazing assets that Francis did a fantastic job of covering, I think that that's a wonderful investment to make. If you have to leverage up, then leverage it to buy businesses. So I think that will affect the bottom line slightly as far as like interest expense comes. But that 15% ish operating margin is pretty bullish, and they did mention on the call that they will increase that over time. They did about $330 million on a full year basis in fiscal year 21. They are saying that they can do probably about $1 billion in fiscal year 2022. So that's going to represent, gosh, I don't know, 200 something percent revenue growth. So, I mean, that's essentially what they're guiding for. Moving forward, I think that as long as they're successful, this business could continue to grow at 100% year over year. Like how Francis said, the international expansion and just the overall execution of the leadership team, it really, it's a no-brainer position for me to have it as a top 3. So I think that those are some of the top and bottom line numbers that I have off the top of my head.
Awesome. Appreciate that, Dylan. Let's keep rocking with it. Kind of top line, bottom line thoughts. Unfortunately, I'm texting with Max. He's getting some type of error. But it sounds like the space is still working, so we'll keep moving for now. But yeah, markets, your thoughts on kind of top line and bottom?
I think that, they came in terms of their guidance for revenue. They beat on earnings. And I think it's, the biggest criticism we get in the growth space is like these companies don't make any bottom line money. So to see them make bottom line money in a period where they were making acquisitions and to have that pretty solidly beat what the expectations were, I thought that was a really encouraging sign. And, I think Dylan made a really good point about their guidance, that it was a bit vague, but it's overall pretty strong. And, overall, I agree with the consensus that this is a company that is misunderstood and likely undervalued as a result of that, at least in part. They're also, I think, to some management teams, as, still a somewhat smaller company in the grand scheme of tech, they remain a show me story. And the kind of acquisitions that they've made and whether they can continue to grow their top line and their bottom line the way they have, I think is the question that's on some of these investors' minds that haven't yet pulled the trigger. But from where I'm sitting, and where I'm comfortable taking a little more risk in companies like this, where I have a high degree of confidence in management and also in how they're executing and the space they're in and the growth that we're seeing there, I couldn't be more happy. I like Dylan, this is one of my top investments, and I'm pretty excited about the path from here. So, I think overall, we just got to kind of keep an eye on the deal pipeline that we see where, we hear about announcements where they're expanding. And then we also got to keep an eye on the M&A they're doing and the vertical integration that can continue to help them expand this growth story here. And, while that's all going on, we got to just be cognizant that we're seeing an expansion in the total number of Android devices, the actual Android devices that Digital Turbine is addressing, the amount of time that people are spending on those devices, and that all sets a pretty compelling amount of tailwinds. So as long as the management team can keep executing well and kind of keep moving forward with this idea of vertical integration and expansion, I think they're in one of the best positions of any of the companies in the ad tech space right now, and that's what makes them a really exciting opportunity.
Perfectly said. And also, I see, I don't know how long ago you posted it, but there's a great post on your page, right, that people should go check out?
Yeah, I just put it
with that.
Oh, yeah, go ahead.
Mm-hmm. No. I was just going to go for it.
I was going to say, just put up a chart of apps. And so this is a chart that's using 20 period, and we're looking at daily period Bollinger Bands, 50 period moving average, and then just pivot points with on top money flow index and on bottom full stochastic. So this is a bullish chart for a lot of reasons. Money flow index shows that we've got a good amount of buyers, and that's confirmed today by volume being pretty strong. If you look at volume over the last period here, we haven't had volume like this since really early May. And even then, this was decisively more overall buyers. So, powerful amount of buying coming into the stock. If you look at the chart itself, you can see that it's decisively pushed above its 20-day moving average. That's the dotted red line in the middle of those two Bollinger Bands. And that was an important resistance level that it was kind of churning below a little bit in later May and mid-May. And that was also right around that 6506 pivot So it had to kind of break above those two levels. And when it did, we started to see some more buyers come in, and probably also started to see some shorts covering in this name, realizing that it's probably looking at making a larger breakout here. This is a company that I've been trading in and out of, but have seen as a long-term investment since, I'm going to say, November, December-ish. And it's just been a monster. And so when it gets these big pullbacks, you know, when you look at the fundamental story, it's obviously a very attractive opportunity. But from a technical standpoint, you know, the way that buyers just keep coming back to this company, it encourages me, because it tells me there's a lot of institutions that are perfectly willing to snap up shares patiently when it gets to a discount. And so I think that's kind of what we saw in May. In May, I think across this entire space, it was no fault of Digital Turbine themselves. There was just a pretty big washout, as we all experienced, if we're investing at all in this space, or if we have some concentration in this space. But this stock got, you know, hit particularly hard because it was trading basically in the mid 70s. And then we got to, May 11th, May 12th, and we're trading down in like the 50s. So that was a pretty big haircut to make when none of the fundamental story had changed. So you've got a lot of pent up demand for this from people saying, you know, I'm just waiting to see a bottom and then I'm going to start buying some shares. Now you've got those technical indicators working in favor of saying, okay, we probably have at least a short to interim bottom in here. You know, I think some buyers may be waiting for it to cross that 50-day moving average as well, and waiting for the 20 to cross above the 50, get that golden cross going. But right now, if you're a little bit more risk tolerant, you set a nice tight stop. You know, you've got that that pivot, you've got that 20-day moving average as both kind of areas where you can say, okay, maybe